The Evaluator Modeling Decision Support module is the submodule that generates the simulation model and is where all of your assumptions are defined. All what-if simulations, calculations, and sensitivities are automatically generated within the Evaluator Modeling Decision Support submodule. The first video demonstrates the full simulation what-if modeling capabilities of this system. This is the Evaluator navigation cockpit from which you can reach all of the modules of the solution. Clicking on the Assumptions navigation button immediately takes you to the Evaluator Modeling Decision Support module homepage. The Evaluator Modeling Decision Support solution includes the following functionality that results in the system operating as a fully dynamic simulation model with maximum linking of variables through equations so that a change in a single assumption drives a resimulation of the entire model and all financial statements and valuations. Examples of the simulation structure include the use of physical data, such as the number of full-time equivalent personnel rather than just financial data, market-related project revenues based on a % share of a defined market to embed a competitive dynamic and perspective, limited use of independent data, maximum use of defining data variables and metrics in equations linking to a limited number of independent variables, such as working capital being linked in equations to revenues and costs, automatic cross-checks to ensure model integrity, such as calculating balance sheet total assets and total liabilities independently and only then ensuring that they are equal so the model is always in balance. Multiple financing options for using a variety of short and long-term debt and equity instruments to finance working capital, capital investments, or cash shortfalls. Exclusive use of pull-down menus to make the data assumption choices that significantly reduce the potential for data input errors and the time required to define a data assumption. Clicking on the Total Employees Cost navigation button locates the section of the Modeling Decision Support module to be used to illustrate the use of physical units. The example shows here displays the assumptions made in physical units, in this case the number of full-time equivalent employees or personnel required on a quarterly basis to support the project, and the green pull-down menus here are used to define these assumptions. And clicking on the Return to Top navigation button takes us back to the top of the screen where all of the primary navigation buttons are located. This concludes the demo for Modeling Decision Support to demonstrate full simulation what-if capability modeling. The second video demonstrates how the model can be used both for greenfield projects or projects in existing operations. This is the Evaluator Modeling Decision Support home screen. The Acquitus Evaluator Modeling Decision Support module supports opportunities that are either greenfield projects that are not incremental to any existing opportunity or projects that add to an existing business. Similarly, the system readily handles the optimization of an entire company or self-contained entity, such as could be found in an M&A type opportunity, or a project to improve a business process, service, facility, or other type of existing business operation. The Evaluator Modeling Decision Support module provides the following features that are particularly useful in a situation where there's an initial period of investment followed by the ongoing operations of a new opportunity. Ramping up, based on a quarter-to-quarter profile as a percentage of full operations of all investments, costs, and revenues. Delaying or advancing the timing of the recognition of additional revenues and/or reduced costs due to the project. Quarterly assumptions that can be either independent of each other or explicitly linked to the assumptions from an earlier time period. For this example, we will use these assumptions for accounts receivable on the balance sheet at the end of each time period. Note that the assumptions around accounts receivable are defined, as we can see here, in terms of days of sales, so they are automatically recalculated depending upon the calculated quarterly values projected for revenues. We can see here that there are separate assumptions in the green pull-down menus provided for up to each of the 7 different independent revenue sources that are supported by the model, and that if desired, over time, these assumptions can be modified on a quarterly by quarterly basis to reflect any changes in accounts receivable over time. This concludes the demo for the Evaluation Modeling Decision Support demo for greenfield projects or projects on existing operations. The third video demonstrates the embedded capability of market-centric modeling. This is the Evaluator Modeling Decision Support home screen. For many projects, the single most important threat to project success is the failure to adequately assess the dynamics of the competitive marketplace. Recognizing this threat to project success, the Evaluator Decision Support module offers the best practices capability to define the physical units of sale for a project in terms of a % share of a defined marketplace. Clicking on the Market Company Navigation button locates the section of the Modeling Decision Support assumptions for defining the size of the marketplace in which the project will compete. This example shows the market for company subscriptions, broken down on a percentage basis. You can see here it adds up to 100% of the total market, based on the revenue size of potential company customers. We see these different size capabilities here, and the average number of individual subscriptions, which we see here in the green pull-down menu, assumed for each company size. This methodology automatically provides a potentially vital competitive perspective by tying the project performance of its most vital and risky financial elements directly to the marketplace dynamics. This also affords the additional potential of assessing the probability of achieving certain levels of market share and penetration over time as a logical cross-check to the feasibility of achieving projected levels of project revenues and profitability. This approach further enables understanding of the impact of a project's market share penetration on the revenue potential of competitors, from simply slowing down their potential growth to something as dramatic as implying a reduction in their current levels of physical units of sale. Further, the system allows the project to develop a set of unit prices that are defined in relation to the prices established by the market leaders, and so explore the potential for price erosion or price strengthening in the marketplace as the result of the project. Please note that the model does not compel the project to be developed in the context of a dynamically competitive marketplace. Any project can also readily be developed in a vacuum with standalone assumptions for revenues and costs and prices, if the time or available data requires it, or if this is an internal project with no significant competitive implication. This concludes the demo for the market-centric modeling. The fourth video demonstrates global sensitivities functionality. This is the Evaluator Modeling Decision Support home screen. The Aquidus Modeling Decision Support model has been designed to enable running multiple global sensitivities with a single change to a pull-down menu. The Global Sensitivities section of the Modeling Decision Support module is located by clicking on the Global Sensitivities navigation button. The model is initiated so that the calculations for each time period and for each independent and dependent variable is set to 100% of its input or initially calculated value. Then by simply changing this percentage, the system carries the simulated change globally throughout the entire model so that the results are calculated as if this sensitivity had been part of the initial setup data, hence the name global sensitivities. In this case, we will change the global sensitivity for total company revenues to 80% in the first quarter of the first year, 85% in the second quarter, 90% in the third quarter, and 95% in the fourth quarter. This has the effect of simulating the impact of a slower than initially assumed level of total project revenues for the first year of the project. the model automatically generates the revised output the instant that the global sensitivity is changed. You can now immediately navigate to the Evaluator Prioritization Decision Support module to check how the simulated change impacted on the overall viability of the project, as well as on your prioritized key performance indicators. This critical functionality allows the testing of multiple what-if simulations in a few minutes to test the sensitivity of the project performance to a myriad of potential revenue, cost, investment, and financing alternatives. The section on personalization and customization illustrates how the system allows the naming of each simulation. You see the title of simulation, and we can change that to be reflective in order to be exactly clear as to what changes have been made and been activated to generate the new simulated results. This concludes the demo for global sensitivities. The fifth video demonstrates multiple calculation methods through the use of logic triggers. The Modeling Decision Support home screen. The Evaluator Modeling Decision Support submodule extensively deploys the use of pull-down menus to trigger the model to take a predefined and specific approach to the calculations. Hence, the name triggers is used, as the choice of a particular number in a pull-down menu triggers the model to carry out a very specific type of logic calculation for the affected variables. The Triggers section of the Modeling Decision Support module is located by simply clicking on the Triggers navigation button. Triggers are used in a myriad of different ways on a period-by-period basis to define different methods to control model logic and calculations. For example, cost variables, such as how commissions will be determined. Financing variables, such as whether or not to use a debt-equity ratio to finance potential cash shortfalls. Ramping profile, to define the startup profile over time of costs and revenues. Market-centric structure, to develop competitive project revenues. KPI metric, to inform the system whether to use year-end or year-average balance sheet values when calculating such metrics as return on invested capital. Level of granularity, number and definition of the number of levels of segmentation, such as a 3-level tiered model. First level being multiple customer types, the second level within multiple geographies, and the third level within multiple product lines. By simply changing a trigger value, the system carries out the simulated change globally throughout the entire model, so that the results are as if this revised logic trigger had been part of the initial setup data and logic. For example, let's use the pull-down menu to change the interest on the line of credit trigger. We're going to change it from 2 to 1. And what that means is it causes the model to calculate the dollar value of interest expense on any line of credit debt financing that may arrive, based now on the end of period balance sheet values rather than the average between the opening and closing period line of credit values. This functionality allows the testing of multiple what-if simulations based now on different trigger logic, and in a few minutes you can test the sensitivity of the project performance and its success to a myriad of potential revenue, cost, investment, and financing trigger logic alternatives. The model again automatically generates the revised output the instant that the trigger logic choice is changed. Similar to the best practices as regards global sensitivities, you can now navigate to the top of the page and you can trigger the prioritization decision support and also the graphical decision support modules to immediately review the impacts of your revised trigger logic. This concludes the demo for the evaluation modeling decision support for multiple calculation methods triggers. The sixth video demonstrates automated data requirements identification based on triggers. This is the Evaluator Modeling Decision Support home screen. The Equitas Modeling Decision Support submodule makes it very simple to locate the data required to be input for any given simulation with the following functionality: one-click navigation and automatic identification of required data. The one-click navigation is displayed at the top of the screen and has already been demonstrated enables the immediate location of the set of data relevant to the 12 different types of assumptions that are summarized here. Simply clicking on a navigation icon, as we have seen, immediately migrates the model to the start of that section of the model. Clicking on the Return to Top navigation icon then returns to the top of the screen. The model reserves the first 16 sets of columns on the extreme left-hand side of the screen, and we can see them here, to display one column for each of the 16 quarters of data assumptions, the current status of the requirements for assumptions data for each variable and metric based on the current choice of the triggers that define the desired calculation logic for that variable. A color coding and asterisk methodology has been used, as defined here, and we'll just describe it. Always, which is identified in solid bright green color and an asterisk, means the data is needed independent of any of the trigger settings. When we see trigger selection, what does that mean? It is a light green color with an asterisk, and it means that the data is needed, but that it is due to one or more specific trigger choices, and that if you had different trigger choices, it is conceivable that it would not show up. Finally, we see not required. This would be light green, but no asterisk in this column. It means that the data is not needed for the simulation, again, due to one or more specific trigger choices made, and other trigger choices could have resulted in the data being required for a different simulation. Acquidus model decision support best practices would be to first set the trigger choices appropriate to the intent of this simulation. Second, set the desired global sensitivities. Third, select the section of the model for which the data may be required using the navigation icons at the top of the screen. The normal practice is to go through these sections sequentially to move through all of the possible sections affected by any changes in the trigger choices. Fourth, locate those rows of variables that have the asterisks in the quarterly columns, either bright green or light green colors, and make the changes necessary in the data assumption section to the right of the definition of the variable for that row. In this example, we will select End Consumer Database Assumption section to illustrate this functionality. Note that for the first variable, input added number of end consumers in database, the triggers selected require that the data assumptions be made for the first 3-quarter time periods, as well as the fourth. The second variable, percent annual increase in gross new end consumer in database, is only required to start, we can see here, in the 5th quarter, and then continue throughout the rest of the 16 quarters. The interpretation of this logic is that the triggers were set to input the number of customers in the overall marketplace as data for the first 4 quarters of the project. In subsequent periods, the market size would be calculated by the model based on a percentage change from the previous period. Notice that the model ignores data assumptions that are not required based on the trigger logic selected. So the pull-down menu values that could have been selected for input added number of end consumers in the database after the 4th quarter are not included in any calculation. This concludes the demo for multiple calculation methods triggers. The 7th video demonstrates user control targeting. This is the Modeling Decision Support module home screen. The Evaluator Modeling Decision Support submodule is where the system enables the user to control every aspect of the setting of targets from the perspectives of scope for each decision support metric and variable independently, ranking assigning a priority or ranking to each variable, variable interrelationships, determining dependent and interdependent variables by which all dependent variables are calculated in an equation relationship with one or more independent variables. Independent variables are clearly identified in the model by having a green pull-down menu included to the right of the variable name to enable the rapid selection of the quarterly value to set as the target. All other variables are defined by the system as dependent variables and their targets are calculated values. Time frame. Values are determined quarterly and the model automatically translates the quarterly values to the appropriate annual values by variable within each financial statement. Data requirements. The set of columns on the extreme left of the screen shows the current status of the data requirements for each dependent variable trigger. The system uses the same bright green color coding and bright green color pull-down menus as described for the independent variable target data selection for the required target assumptions. The priority or ranking to be assigned to each independent and dependent variable, and the target value to be used in the calculation. The model also displays an asterisk in the appropriate quarterly column in those cases where the required target data has already been chosen for that variable, and no asterisk meaning that the target data has yet to be chosen. The model automatically propagates this target data throughout the valuation model, where it is used by both the Evaluator Prioritization Decision Support submodule and the Evaluator Graphical Decision Support submodule, as we have seen in other videos. This concludes the demo for user-controlled targeting. The 8th and last video demonstrates flexible timeframes using a quarterly example. This is the Evaluator Modeling Decision Support homepage. The Equitas Modeling Decision Support module has the flexibility to enable the definition of any time frame as representing a single time period. The example here has established that a single time period represents a quarter of a year, and that 4 of these quarterly time periods should be for the yearly time period, either aggregated for income statement and cash flow statement variables or aligned for the balance sheet, using each 4th quarter time period as the end of year. The system enables the establishment of the definition of the time period and the desired aggregation or alignment methodology as data in the following ways. First, in terms of definition. The text that has the system printing the description of each time period is found in the Evaluation Customization Decision Support submodule that will be described in the Personalization and Customization section of the memo. Second, structure. The aggregation and alignment logic is defined in this Evaluator Modeling Decision Support submodule by selection from a pull-down menu of possible choices. This concludes the demo for the Evaluator Modeling Decision Support submodule.